we'd like you to do now, we're going to give you a sheet of questions.
Oh, yeah.
You need to get yourself into groups of 4, preferably with either a bookkeeper or a tax agent within the mix. We're going to give you these questions. You've got some pens and papers. You have 10 minutes, and you're going to work it out, and then we're going to get the answers from our professionals. So get yourself. Chinese coming up first to give you the first 2 answers and the explanation behind it. Give her a big clap. And Tony's from Twin Business Consultants. And I'm going to give you some cheat notes now. So one each?
Yes, okay. The first question was, when should you use the cash versus the accrual basis? Am I asking for questions here? Does anyone want to put their hand up?
Yay, go on, be brave.
Cool. Yes.
Is when you meet the statutory requirements. And also, I guess, it's all relative to cash flow too. You look at a business, I guess if you've got a business that purchases goods in, they're not getting paid from their customers, therefore, if they're paying on the accruals basis, they haven't received that money from their customers yet. They might have the ability to pay stuff. That's key, right?
Yeah. So there's 2 parts to it. The first one is the statutory limit, like you said. $2 million is the cut-off. So if your turnover is more than $2 million, you have to go onto the accruals basis. If it's less than $2 million, you have the choice. So I've just done a quick print out here. The first page is really dry. We've got the statutory limits. And on the second page, I've just given you some of the things that you might think about when you're making that choice to go onto the cash on the accruals basis. Okay, so to go into the cash basis, some people like to actually just pay the instalment every quarter so they know exactly how much is going to be payable. So the cash basis lets you have the GST instalment rather than calculating it every quarter. Another reason that you might want to go into the cash basis is if you've got private adjustments to be done on your basis, say for your cars or your... Oh, she's taking a photo. For your cars or your computers and things like that, on the cash basis, you can just choose to do a one-off adjustment at June. You don't have to do it on every single entry. So some people prefer that. And then the big one is about the cash flow, like you mentioned. If your creditors or your suppliers that you owe money to are higher than your debtors, you may actually be better off on a cash basis. You can actually free up money in the cash flow for your clients. So if it's, the example there is if your suppliers are owed, if you're owed $5,500 from your debtors, there's $500 worth of GST generally in that amount that you owe to the tax office. But if your suppliers are $33,000, there's $3,000 that you're due back. So by putting yourself on the on the accruals basis, you'll actually free up $2,500 for your client. And for small businesses, that's an awful lot of money because they can just pay off their mortgage or pay for Christmas. Okay. The other thing to keep in mind is that $2 million threshold, because as you start to approach that, you don't get any notices from the tax office. But what can happen is you'll just get a BAS in the mail for September and it'll say you're now on the accruals basis. If your clients aren't prepared for that and they haven't saved money, that can take $5,000 to $10,000 out of their cash flow overnight, and that is a big hit. So that's just something else to keep in mind. Rightio. And the last,
Sorry, that 2 million, that GST inclusive 2 million?
well, I probably should have checked that. My understanding is it's exclusive.
Yeah, it is exclusive.
Yeah, because it's not in the GST, it's in the small business rules. Okay, and that 2 million is not only based on you, it's you and your affiliates or your associates. So if you've got 4 companies, it's $2 million turnover combined. So that's also keeping in mind. And I just wanted to point out that when you're choosing cash or accruals, it's not something that you want to do every single quarter. You want to make your decision and plan on that being a permanent change. And if you do want to change, you can change it 1st of July, and sometimes they'll let you change it 1st of January, but you have to apply in advance. You can't ring up at the 31st of March and say, I want my March base to be on the cash or accrual basis. And if you do change, in the changeover quarter, it's not as simple as just bringing out your GST reports. There's other transactions that you need to take into account. So you might just want to have a chat with your accountant at that stage. Okay, does that make sense? Any questions? No?
Tony, wonderful.
Thank you. And my second question was, how do you treat... sorry. I'm sorry now. How do you treat GST on a lease versus a hire purchase versus a chattel mortgage? That's a question that I get asked a lot. So I just did a little table there for you. So this is just a little cheat sheet. So you can look through that at your leisure, and there's the ATO rulings behind it, or the fact sheet. Basically, if it's a lease, you claim 1/11th, or the GST at 1/11th of the monthly payments. If it's a chattel mortgage, you claim the GST up front. If it's a hire purchase, again, you have to look at whether they're on the cash or the accruals basis, because it's different. If you're on the cash, you claim it over the life of the hire purchase. If they're on the accruals basis, you claim it up front.
Yes, sorry. Thank you so much. We appreciate that. Okay, so the next 2 questions. Hannah? No, Brett.
Can I just interrupt on that? Sorry. There is actually draft legislation in about the hire purchase that you can take it up front, but the legislation's got to go through. So that's part of some legislation. I read it on something else.
Lots of changes coming about cars and everything, things like that.
Yeah.
And sorry, just on that, it's only draft.
Yes, it is draft, yeah.
Okay, so the next question, number 3, is actually my question to Brett that I had. We had a mutual client, and I said to him that I have a client who has given me the American Express, and he said to me, everything on there, they don't need a receipt because the American Express tells you what the GST is. Unfortunately, when I've gone through it, insurances, they claim 1/11th. All the Coles and stuff and that you see is all 1/11th. And so I've said to them, no, you can't. No, because it says GST, I'm not going to take it at that. So I've had this argument with this person, and so I had to go to Brett saying, look, what is the go? And he then gave me the answer.
Yeah, it's more the fact that can't. We debated in our little group. Dean thought Diners Club was accepted by the tax office, so I'm not quite sure on that. But the Amex card statement that we were looking at may have had a Woolworths transaction that said they spent X dollars, and one whether that was GST. And when Sue went to look at the receipt, there was some coffee and tea and some milk and so on. That doesn't have GST.
And international fares, they don't have GST.
So if it's an airline ticket or another one is where you get solicitors' bills, where they might be charging a disbursement, which is like an ASIC fee, which is GST free. They won't have GST, and your AMEX statement won't pick that up. And for those little things, the tea, coffee, milk, it's not going to be huge, but it's more those larger accounts where the potential there's no GST in the price. So if in doubt, you always go back to the receipt.
So what we've decided to do, or what I've decided to do as a BAS agent, is to say to them, under $82.50, I'll allow it. Anything over that, then they must give me a receipt. Giving them lots of headaches, but I mean, that's their responsibility is to provide. If not, I code an NTI, which is no tax invoice, so that my accountant knows that I've tried to get the receipt, it's over the amount that I'm prepared to gamble, and I'm not going to do it. So then I just throw it back to them. And so I don't prepare to BAS, Brett does, so then he makes the call. So I think that that's just my safety thing for me. Otherwise, I'm a BAS agent and I claim it without the appropriate source documents, it's going to be fire back on me. So that was
I rang and spoke to a GST specialist, and the only credit card that will be accepted is an Amex and Dyna, and it must only be in the company name, not private name.
Okay.
Is totally unacceptable. It can only be in a company name, and they will allow it, yet they were aware that not the correct GST was in it, and she said, we will go back to source.
Documents.
Okay.
Yeah, that's it.
Great.
But it can only be taken in company, corporate company, yeah, and only Amex and Diners.
Okay.
And MasterCards, Visas, no, you must go to source.
Thanks, George.
And the second one was just about the GST on the vehicle. Is that any thoughts?
Luxury car tax. Up to the luxury car tax level. The length.
Yeah, so which is around
57. Yeah. 59. I forgot what it is.
57.5, 57.466.
Yeah.
GST inclusive. So they're limited to 1/11 of the depreciation cost limit, which is 57.4. So they just can only claim GST up to that limit. That's it.
Any questions for Brett? Lovely. Anna, very much for the last two questions.
Okay, my first question was the list of receipts and which items go at G1. That's total sales for anybody that don't know their BAS labels. So obviously number one, GST inclusive sales and goods, that goes at G1. Rent received from a commercial rental property, that's also at G1. Interest received on the bank account, and this is the one where I notice the most errors, it does go at G1.
Yes.
But dividends received from share investments don't.
No.
Tax refund from the previous financial year doesn't. Proceeds from the sale of a company motor vehicle does. Distribution received from a partnership doesn't. And a contribution from an employee towards their fringe benefit liability does. And that's GST inclusive too, in case you weren't aware. So then my last question was, Bill acquired a computer for $3,300, including GST of $300. He planned to use the computer for 90% of the time in his business and claims $270, which is 90% of $300 on the June 10 BAS. During the 11 financial year, he used the computer for 60%. Do you need to make an adjustment, and if so, when? Did anybody...
Do you want the real world or the tax world?
Yeah. Well, did anybody want to give an answer on that? What they... Sorry?
You used to do more work.
Because you only really buy a computer for your business, right?
Yeah.
You're never ever going to be able to...
Yeah, it's always 100%.
Yeah. And it's only 3 years and they're gone.
Yeah, well, that's right. Did anybody have an answer? Or...
Yes.
Yeah?
Yes.
You do make it.
Yeah, we had yes at the next BAS before June 11.
There's actually a ruling, and there's a section of the GST legislation that you may not know about called Division 129. It talks about adjustment periods, and there's actually an error in that anyway. What he can actually do is claim 100% up front. He doesn't need to make an adjustment up front for his private use. You then have what's called an adjustment period, which is 12 months after the end of the period that you made your purchase. So in this case, he's bought that computer in the June 10 quarter, so he then has 12 months from June 10 to make that adjustment. So June 2011 BAS is when he would make that adjustment for the 60%. So you don't go back and amend the BAS that you've made your claim. And that same rule applies for motor vehicles as well, where a client might buy a motor vehicle and then intends to do a logbook. They can actually claim 100% up front and then make the adjustment in the adjustment period.
Yeah, just to follow up from that first question.
Yes.
A lot of clients, where do you pick then following on from the G1, where do you pick up your T1 figure from?
T1 is G1 minus 1A.